Can see my screen, and we're going to take a look at the S&Ps and the Nasdaq real quick. So every once in a while, we're going to pop into the indexes, just because it was a really important day because we were retesting, um, retesting highs, but also a lot of volatility around 12,500. And then on the S&Ps, you actually had a kind of a weak day, right? I mean, if you look at that 15-minute chart, you can see that we are pretty much, in negative territory after starting out the morning, which seemed to be optimistic, positive futures in the S&P. And now what we're looking at is kind of a divergence, if you will. So I'm super psyched that it's Monday. First of all, Monday, if you're a new trader, is a good day to watch. And there's something that we say at Simpler, which is cash is a position. And what it does is it's basically this. A lot of people describe it in two different ways. Really, it's like, hey, are you conserving your capital, or are you kind of being shown another card from the dealer? And so on Monday, I think a lot of veteran traders really just kind of look for Monday as a point of reference as far as support and resistance, right? Because we want to know the bigger picture, and the more data we have, the easier it is for us to, have a clean setup or something that is interesting to trade. So as far as interesting to trade, let's talk about what happened today in Netflix. Now, if I am clipping just a little bit in the audio, I should be good. I've made a few adjustments, but we should be fantastic. Let's talk about what happened in Netflix today. So obviously a pretty stellar move. 20 points in Netflix is not something that happens all the time. And what I'm looking for is momentum. So if I'm going to the option chain, I want to take a look at where's the volume. 5.5 million today. We have some really crazy out of the money open interest into this Friday expiration. So as I come to you from the trading dome, from my domain here, Netflix 500 is a good area of support. We've had a lot of max pain readings, which is basically the most amount of money lost by out of the money options, right? So it's like a max pain. And so what happens is whenever you have, that kind of calculation, the hedge funds, the big market makers, they don't want you to be right? That would kind of not make a stock market. So what they want to do is squeeze the most out of what they possibly can, right? And so if we know that, we can go, okay, well, let's play that game. And they always say, well, let's be honest, it's in Mastering the Trade a few times as far as quoting, but it's one of these things where you kind of go, whenever the market is leading the dance, whenever you're dancing with the market, you let her lead, or him, whatever your preference is. But, let the market lead. Obviously, a pretty strong trend today, or continuations in not only just the NASDAQ, but things like Netflix. And then we're going to get into some charts here on Zoom. So the reason why I want to trade Zoom is because I've had a really nice time trading Zoom to the upside. But what it's doing right now is kind of changing personalities similarly to what Tesla did. And we're going to take a look at that chart real quick on the daily time frame. You'll be able to see that these look very, very similar, with the only exception of the major climb that we had for the past 2 weeks. If you take this out, this very, very tail end, you're basically looking at the same chart, right? The big increase here, the big increase in 588, and then kind of a pullback, and you can see that there in Tesla as well. The thing is Tesla's already shot up. And one thing that we know about Zoom is it can easily get bid up in a major way. And I think this pullback is something that we buy. And the reason why I'm so, enthusiastic about it is because Zoom is a very, very nice tradable underlying. There's a lot of volume, especially if you get a nice momentous day. And then let's just be honest. I mean, we're looking at a daily micro squeeze. We have bearish momentum right now. But look at the double bottom here. And higher probability trade in the trend. One, this idea that it's just going back to 250 seems ridiculous compared to the gap up that we had past earnings, and then the gap up in general on heavy volume. And let's be critical of my perception of this. Let's just be aware of the bias that we have for August and September due to COVID-19 and everybody basically working from home and using Zoom. It's been a very a big section of my year is looking at things that benefit streaming, e-commerce, PayPal, a little bit of social media, Pinterest. Pinterest is kind of an amazing chart. And so we can talk about equities, and we can talk about, you could call it a quarantine list or whatever. That sounds really bad, but it is what it is. And so now the idea is we can trade all these on momentum, but let's continue to stay dynamic. If there's multiple setups and there's multiple opportunities, let's take a look at them all. So, here we are at the end of the year. Let's look at GLD, and we're going to transition into commodities because I think you'll like, my coverage on this. We're going to jump into I don't know, I don't really ever call it macro, but we're going to look at something that's very, very interesting for next year. So let's talk about gold first, GLD. I want to buy this whenever we start compressing the volatility. What does that mean? Well, what it means is anyone that's come in here and bought this most likely had a long-term perception or plan. So one, let's assume that. Two, let's assume that they're cost averaging in, right? I mean, most people that I know that trade GLD are buying it for the long term. March Delta 60 calls, maybe the end of 2021, Delta 40 calls, Delta 50. Not a bad idea. The thing is I want to wait a little bit more to actually buy, but I don't mind shorting it. One of my favorite things to say this year has been gold is a great short-term short, and a good long-term long. And fundamentally, I like that story. Two, the previous 2 points we were talking about, and then I could throw in my millennial 2 cents where it's like, okay, well, we expected all these people to be buying gold, but everyone's buying Bitcoin. So we'll see how that story plays out. Hashtag my Ripple crew, XRP crew. I'm probably picking up a lot of haters for that one, but y'all, don't you know that the establishment wins every time? You know what? One of my favorite things to do is mix in a little bit of humor with trading, because trading can be very, very stressful if you're in the learning phase. And I'm being nice by saying learning phase. But no, I truly, I know deep down that I was going to be a trader long ago. So long ago, I learned the lessons, and a lot of lessons just really rotate around position size. So the question for gold is, how do we position size? And let's say that you have a small account. So if you're like, hey, I want to be long-term, I don't want to spend too much money on these, but I definitely like the long-term trade. Maybe you have a $10,000 account, maybe a $5,000. What I've already done is basically be buying August and March of 2021. And it gives me enough time just to kind of watch it and forget about it. Put it on. But I would say wait. If you're not really engaged, you could probably short GLD down to 167 again. And maybe better. But right now, it's not setting up for a short-term long. You follow me? So just kind of word of caution. Obviously, I have no control over what you do in your portfolio. I'm just trying to shorten this learning curve for you. It's important to me to, continue to get whatever information you need, whether it's through me or other mediators via here at Simpler, to be good information, solid information, things that you can work with over the long term, things that you're not going to forget. So in lieu of that, let's move to the next part of the process. And I'm going to give you that long-term view and why. So here at the top, you'll see the NASDAQ. In the middle, you're seeing something called the put-call ratio. I'm sure if you've already been in the Simpler rooms, you already know what that is. And this is market internal stuff. And then you have the skew. And instead of like going in and, pounding something into your head that you already know about, and it's also a Google away as far as put call ratio and how to read it. I always say in the options world, it's nice to hear it and you can get a verbal lesson, but it's also worth seeing on the screen and being like, okay, the amount of puts over the amount of calls are being bought, and this is the ratio. And then at a certain point, it's like, well, no one's buying puts anymore or what have you. Here we are, if we take a look at the NASDAQ at the top, skew at the bottom, and just remember anything above 135 on the skew, anything that is below 0.7 on the put call ratio, and by the way, this red line is the 10 period moving average. I'll tell you why that's significant here in a second. And then you can see clearly the extra long, choppy rally that we've had throughout November, a little bit of December, considering pretty big pullback last week, but sincerely bought up again, right? But look at the tail ends of all these charts. Don't they correlate? So I'll tell you why they correlate. The skew's above 135. The NASDAQ is up. And any time the put call ratio is below 0.7 and below the 10 period moving average, this is where hedge funds come in and actually start to throw on hedges, which is basically a way to play the market to the downside in a very small way that would pay off big. And at the same time continue to be playing the market long, which has been the easier side of the markets this year, which has probably been really good for you if you've been long for the majority of the year. If you've also been watching your position size the entire year, the people that were playing the market long from, let's just be honest, whenever Corona started, February, March, have really had a great year. And there have been times, I remember specifically that second week in November. Don't you ever forget that. That was a chop fest. That was woo. And then there was a month in August that was pretty crazy as well. But the volatility is kind of random. Well, guess what? The markets are random. And what's happening now is you've had everything bought up, and here's the NASDAQ. And then look at this decline. This was back on September 2nd, 3rd, and 4th. That's 1,000-point decline. Whenever you were below 0.7 on the put call ratio, below the 10 period moving average, and when the skew was above 135. And in fact, it was 145, 150, 147. Okay, I smudged a number there. 148. Right? And then whenever it was there, boom, major pullback. Now, if you follow Fibonacci Queen, she might have timing. I haven't checked it today, and I'll check in with her. But basically, it's one of those things where, what is the overall pattern of timing? When could there be a highly predictable pullback in the market? That 1,000-point pullback in the NASDAQ, right? So, you can still play the market long all day. What you can also do is have hedges on. And if you are new to options and you don't know what a butterfly is, check that out. It's basically buying and selling puts and having protection on both sides. And join us in the rooms. We love the butterfly strategy. But it's very cheap. You're always buying a butterfly, and it's basically like, hey, risk to reward ratio is very, very high to the amount of risk on the table. And, you know, it's a great way to continue what you're doing, but just know that you're covered if the market does pull back. Does that make sense? Okay. So let's keep on rolling, because there is another chart that I want to show you. So gold, good short-term short, long-term long. It's kind of funny. And then let's talk about what the heck is going on with NVTA and Fastly. These are two that are on my list. And the reason why I don't trade without the 10x bars, and you can check that out in our store. It's an indicator. Clearly you can see that these are green 10x bars, good volume here. And what it does is it gives me market conviction. So it's a combination of the ADX and the DMI plus and minus. Again, don't want to go into an explanation as to what that is. We have an indicator that simplifies all that stuff and puts it in beautifully colored wicks with volume dots if the volume is a certain percentage above the previous wick. And it works across all time frames. So check this out. If you go into a 5-minute chart and then you look at these 10x bars, you can see that all day Fastly was pretty weak, right? Not a huge pullback, but you know, it wasn't strong. And we had market conviction. There was a lot of selling here. On NVTA, on a daily time frame on the right-hand side, you've actually had a really good volume, and I want to buy this pullback. That's why it's on your screen, and that's why we're talking about it. Now, let me show you something that happened in the midday. Here's your 15-minute chart. Is that not the most... And this was like across the market, right? I mean, we had a nice, you know, positive move right at the open, and then it pretty much sold off, and then kind of quiet for the rest of the day. But this right here, that chart on NVTA, is so like representative of November and December. A lot of buying, a lot of positions getting out, and then no one buying on the sell side until further down. The NASDAQ all day, right? Tesla some days, Zoom some days, Netflix some days. Just want to do the robot again. I need to work on that. I'll get back to you on that. But let's talk about Tesla and Amazon. Back when I was younger, going to summer camp, I would robot to Intergalactic Planetary by the Beastie Boys. You know what I'm talking about. So Fastly and Tesla, real solid. I mean, I think that we're about to hit 700. I think that the 10x bars that I was just talking about give us a good reading of high volume. So looking at that and going, okay, well, I'm also chasing a 5% move, a 30-point move in Tesla. I don't know if I want to do that. You know, you're already extended. And if you have your voodoo lines up here, which is on my chart, you have 3 separate days last week where you couldn't break through 654. The question is, are we trying, and how hard? Let's take on the volume. And I thought I connected my chart, but I'll go ahead and manually type it in. 51.5 million contracts so far. It's a good amount. It's a good amount. We have a lot of open interest into Friday expiration. Y'all, there's 36,000 at the Delta 20s, of open interest unexecuted call contracts is these second deviation moves, right? Delta 20, Delta 30, however you want to round it. Obviously, the further out you go, the cheaper they are because they're a lower probability. So if we have a couple things that indicate we go higher, then I think Tesla is actually one of these things. And I hate saying this, but I have to say it because I'm a trader and I got to tell you the things. The question is, do we have a Santa Claus rally? It is a thing. So, do we see 700, 750 whenever we hit 655? Right? Does that Santa Claus rally start to kick in and then January maybe becomes brutal? Right? So it's tough. But we know the easier direction of the trade, or playing Tesla successfully, has majority of the time been to the long side. Whether that's your selling put credit spreads or just buying calls if you got it, right? So, or bullish butterflies, let's be honest, that could be really fun. In fact, that's something I'm going to look at tomorrow whenever the market's open, is doing maybe a bullish butterfly pinning this Friday at 700. But before we jump in, let's look at an hourly chart. We're going to take off the voodoo lines, even though my heart says no. We're going to go ahead and do an hourly chart and look at the previous high from the previous low to give us a Fibonacci extension. And we want to know where the behavior of profit taking will be. So, look, I remember being in Las Vegas. We were doing a talking seminar via Simpler. And we also had, we were speaking at the Money Show, things like that. And I had some long calls on Tesla, and it just skyrocketed. It was one of those days last, I guess, November, September, October. It all blends in now. Let's be honest. Don't pretend like you know. And she was like, well, did you leave some on? Because I had already taken profits at a 1272 extension. And I did not leave any on because that's just kind of the trader I am. I like to take all profits and, maybe continue the conversation whenever the setup looks good again. Right. Okay. So looking for clean setups always. And here in the trading dome, the 786 is at 636, and we settled above 636 today. You can see these kind of I guess, somewhat of a rainbow without the green. Anyway, we're hitting the 786, and we're not really extended. The 1272, guess what, is below 700, and it's 680. What's the expected move into Friday? Expected move, implied volatility is 112%. Expected move is 65. So we could easily hit, not easily. Well, let's be honest, we don't know how easy it'll be. It could be tomorrow. It could gap up overnight. We are living in history, folks. If you've been a trader for a long time, this feels unique, like a unique year. And seems like volatility may not really go away for quite some time, which is interesting. Is the future where you're basically, in charge? Is the world of finance changing so much that you're in charge trading? Whether that could be your savings, your IRA. It's really interesting what we're kind of walking through right now. So we know that we're not extended, and we have a whole bunch of squeezes to wake up to tomorrow. So the 2 hour has a micro squeeze, and we're going to go ahead and look at that because anytime we have something starting, we want to see how mature it is and where the histogram actually resides. Are we above zero on the histogram on the Squeeze Pro? You can see that there in the midsection on the left hand side of my screen. And then also, let's just go ahead and zoom in here and then boom, there's your above zero histogram, micro squeeze, 2-hour chart. Don't get this twisted with the daily, right? And then you can see that we're resting right above that 786, and that's based on the 1-hour chart. You do not need to confuse those. You don't even need to think about what I just said right there. The fact is we know that either on an hour or a 2-hour chart, we're not extended, and Tesla could, continue to go higher past 655. Okay. Now here's my theory on this, and I'll leave you with this. If we are walking through a time in history where the most amount of money has been, gathered away from all the big funds out there via trading Tesla, I wonder if we are in a scenario where there's a hot stove. In other words, I wonder if the people that totally lost, whether it was a lot of money or a noticeable amount of money or whatever it may have been, I wonder if they're going to touch the stove again and short it again. Well, I think that's already happened. And I don't think they're learning the lesson. And it's not like there's a real, tangible lesson. It's human behavior. And I wonder if there's so much momentum, so much buying in Tesla, you're just having short positions having to get out. And, there's a lot of other things that drive that, whether it's market makers maintaining their gamma or however you want to word that. If you understand that sentence, by the way, then you understand that that's also a leading, reason why Tesla has gone so high. But you also have, a ton of new traders that are coming in here and kind of going through the discovery phase. So, and buying Tesla, right? So, see, if I was a new trader, I wouldn't be shorting Tesla. I'd be buying it. And I have full faith in the general trading public that's the easier side of the trade. And that you would know that. I used to be a contrarian trader. I used to, call the tops and call the bottoms. But that's not really, that's not a useful strategy, actually. You're just basically saying, I'm right, and I'm hoping that I'm right. Because you're wrong until you're right in the options world, right? Wrong. No, just kidding. But right. We have fun, right? Okay, so my favorite short-term short is GLD. Favorite long-term long is GLD. AMD and NVIDIA. AMD is holding 90. Which is really interesting. So a couple weeks ago, I was talking about how AMD was a $100 stock, and then on the left-hand side, 2.25% up. NVIDIA getting a bid after last week's pretty nasty dump, right? Pretty nasty pullback below 535, down below 505 or 509 rather. So semiconductors long as well, and we have good volume from this morning, and then that pretty much trickled into the rest of the day. NVIDIA traded about 6.6 million, and AMD traded what, I think 47. Okay, I was going to say 37, but I also know that I didn't watch the last 30 minutes of the market this afternoon, but we will see how it goes. So have your hedges on, make sure they're super cheap. Don't spend too much money on those hedges, but definitely put on a hedge right now. Being able to benefit from a pullback in the market. And then also, there's a lot of really good stuff out there that's setting up for the long side. So it's definitely not dull. And I wish you all the best luck, and just watch your position size. And, join us in the Simpler Gold Room, where you have a bunch of experienced traders that have been doing this a long time, that have some really easy indicators to use that can make a huge impact on your trading. And so I can just go ahead and tell you, I don't ever trade without the 10x bars or the Voodoo lines or Squeeze Pro. The Ready Aim Fire is great too. And then it's more than that. Trading is not about indicators. Trading is about having a view of the market and having a plan and pouncing whenever your setup is, clear as day. So, and you'll catch on to this the more you just, hang out and listen to us talk and go through some of these things. It can be very beneficial. And our idea is that we can shorten the learning curve for you. Because in the options world, your learning curve can be very long. It can be a year or two. Some people 6 months. Some people 3 months. They just get it, right? But that would be a very, very thin slice of the trading population. But so I will leave you with that. I will see you in the options room tomorrow morning. And then I also have a training room session where if you are a new trader, you can join us. Join me into the training room. It's a smaller group where I'm answering questions from new traders, and then also just going through my setups and trading micro futures, which are one of my favorite instruments. Low capital requirement, low risk, supplemental to trading your options. Super fun too, and that's what I like about this. Is fun to me, right? So it's difficult, but it's super, super fun. So I think that there's a lot to learn, and there's a lot of lessons, and we can help you avoid the tough ones, right? So that is my goal. I will sign off, and I will see you tomorrow morning in the options gold room. Cheers, y'all.